Live. Good morning to everybody. And how are you doing? And Brendan, how are you doing, my brother?
I feel extremely handsome. There's just so much to really look out for today. It's a sort of still in the first and early stages of the month, and wow, you can only make the best of it if you want, and you can see the opportunities, and that's why I think we're here to really expound on those aspects and how one can actually leverage. But how are you doing?
I'm good, my brother. I'm good. We are good this side of the outskirts of life. We are in the woods, but all is well. And today we're gonna be going through Enterprise Thursday. Remember that this week in our growth mindset conversation, we've been talking about the fixed mindset versus the growth mindset. And we talked about how to defeat. I talked on Monday how we talked about the importance of embracing change, the importance
Mhm.
of not being fixed. We talked also about on Tuesday, we talked about the model of your finances and how that can encourage you to make specific changes in areas. How that can encourage you to deal with your change barriers. And we also talked about yesterday organizing your portfolio for growth. How you can implement a growth mindset and where you place your money. That's another important conversation as well. And finally, Vernon, today we're going to be talking about change management because we're going to be talking about a growth model for businesses, but then also dealing with change management because usually there's a resistance to change. So today we're going to be talking about organizational change, while we'll also be talking tomorrow about personal resistance to change. Because that is the greatest battle. Often people have got great resistance to change. But before we get down into that, Vernon, let's get behind the markets in today's conversation on Enterprise Thursday. And today we'll be going through our daily market roundup. In our market roundup today, we have seen that the Kwacha has finally dropped below 20 in this mega rally that has been happening. As you can see, there's this nosedive of the dollar as it touched 21, heading towards 22. It literally reversed course and pushed back downward, closing yesterday on the interbank rate at 19.9991, down 2.06%. The dollar is now only up 10.51%, but on the week it is down 6.65%. It's actually quite good news. I can see the smile on your face, Vernon, to see the currency going the other way around. We also are seeing that even the rand has taken a serious nosedive as well, down 7.24% on the week, only up 1.18% on the month, but down, only up 4.64%. That is good news for Zambians because this means that this is reversing the stress of potential inflation from imported South African goods. Remember, South Africa makes up 35% of our product base. 35% of our import base, not product base, our import base, especially our household consumables, those come in through South Africa. So Rand effects can actually hit us hard if we're not careful. The other factors, Brendan, that we want to pay attention to is that GRZ bond index also came in yesterday 0.7%, 0.07% up yesterday, up 5.7% year to date. What we are seeing also is a strong reversal happening in the GRZ bond index USD, which is up 1.3% and up 8.14% on the week. We'll be talking later about that and what that means for investors abroad and investors locally as well. But interest rates, you can see after going through this constant step ladder, going up, and away from 23.58% at the beginning of the year to 24. Now they've kind of leveled off at 24.79. On the week, it's down 1 basis point. So you can see there's been some micro movements in the interest rates. Especially on GRZ bonds, this is composite yield that you're seeing on the secondary market. Remember, this is secondary market data showing that we're getting a stronger currency and we're getting a strong buying blaze that's happening in the markets as well. Now, on the commodities section, we did see yesterday that copper did finally bounce off the lows that it came down on yesterday. While we're seeing oil leveling off at $85, we are seeing that this consistent conversation about the oil price will start coming in and what this means. And we're going to see what that means currently. Every day, I kind of give you a prediction of what the prediction model is moving towards. Remember, this is
Yeah.
a dynamic model, it changes every single day. And it gets us closer, but I am easing you to it. You see, the longer you watch that thing, the more you tend to expect it. But we're also seeing that gold, if you take a look at gold in dollars since mid March, has been flying off the handle, up 20. 2,037.5, up 5.98% on the 1 year so, but up 11.57% year to date. That's how good the gold price currently is, and good for us who are investing. But remember that the dollar is down, so all dollar-denominated wealth protection assets are facing a walloping. Now, this is where our oil projection model for the 1st of May is already looking at. Remember, this is too early to predict, but this is just currently what the trends are showing us. And oil prices are up on the average this month, while the FX rate is down on the average this month. So we can see that there's a bit of an opposing force. Somewhere in the middle of the month, we'll be able to give you a proper prediction. But for now, this is where things stand, just for us to all be able to pay attention for now. Now, going into our wealth insurance products, take a look at it. Bitcoin in Kwacha has currently slid down again, down 2.4%. And you can see on the week, it's down 6.42%. That's what I keep telling you people. Cryptocurrency is a very, very, very volatile sector of the economy, of the financial markets. So you always want to make sure that it doesn't comprise of too much of your portfolio. That's why you keep it there just when the conventional assets are not operating as well. But you can see cryptocurrency then is down 6.42%, down 2.4%, mainly because of the strengthening of the kwacha. The key here is just the strengthening of the kwacha. So it's down 2.4%, but still on the year to date up 86.71%. Ethereum didn't go down by too much because Ethereum as a token went up quite strongly against the kwacha, so it counteracted it. So the Ethereum price only down about 0.03%. Always think of Bitcoin like digital gold and think of Ethereum as digital oil. Okay, that's what you need to look at it that way for the world of decentralized apps. Always look at Bitcoin as your digital gold and Ethereum as your digital oil. And there you can see how these two things operate. Now, gold in kwacha as well, down 2.11%. Only up 23.3%. So it shaved off some gains from the earlier part of this year. So we can see now how the asset markets are doing so far. Now, if you're looking obviously at the main board, sorry, we've got the wrong date there, but this is as of the 7th. We have not moved the date, sorry, by mistake. But we're seeing as of the 7th there, as of the 6th, as of the 5th, not the 3rd. We are seeing that the year-to-date returns guys are 86.7% Bitcoin, 75% Ethereum, 23% gold, 10% USD. The stock market is up 8% thanks to CEC and Zanaco, and bonds are up 5.7% year to date. So we are seeing that the conventional markets are starting to perform on a controlled manner. Now, but then we also have to take a look at how our four horsemen and what they're telling us. We're really seeing some inflation headwinds starting to come in, and that South African PMIs are spiking. I've gone down into decline. That is a bad sign because that means the manufacturing companies in South Africa are going to be producing less or producing at higher cost. And that will reflect into the imports that we're getting from South Africa. Oil inventories declined 3 million. That's putting upwards pressure on the oil price, adding to the OPEC production cuts as well. Mortgage interest rates in America dropped from 6.4%, dropped from 6.55% to 6.4%. That's good for us. U.S. growth slows down. Now, why is that good news? Because the Federal Reserve is less likely to keep hiking rates when U.S. employment growth slows down. Remember, because they have a dual mandate. And the UK interest rates, 5-year interest rates in their auction also came down quite significantly yesterday. So we are seeing interest rates playing in our favor. In industrial, we're seeing a little bit more bad news than good news. German and EU composite PMIs were both in the positive and they both rose. UK PMIs were in the positive, but they declined. Italian sales came down and US employment growth slowed down. That affects international trade and growth. While on the industrial side, we're actually seeing that German month-on-month factory orders went up by 4.5% versus the 0.5% growth of the previous month. But we are seeing that Indian services PMI is in the positive, but they came down slow. Spanish industrial production went into the negative even deeper, and US mortgage applications also came down, meaning the housing market is going to be demanding less and less copper. Okay, so that's also a little bit of tough news for us. But on the other side of the equation, Vernon, we'll also be looking at the other parts of the economic calendar. We also had Caxton PMIs coming out yesterday from Caxton PMIs also coming out yesterday from China. And remember that what we're trying to deal with China is we are seeing prospects of growth, but we are seeing slowdowns in the potential to grow as well. Simultaneously, what we're seeing in terms of yesterday was a Chinese holiday. Remember, you said it was Qing Ming Day, not an insult, people. That's the actual day they were facing. And we saw Caxton Services growth. And this is what I keep saying about China. China has a service industry that's been growing consistently and strongly. Its service industry PMIs are currently sitting at 57, while the manufacturing sector is declining. What is this coming from? China is getting old and rich. And as a result, there people are opting to work in the service sector, less in the manufacturing sector, because people are also becoming expensive. So you're seeing a lot more manufacturing going to countries like Vietnam, Bangladesh. That's where things are going. Or as in South Korea, what they're doing is they're opting to automate a lot of the production. So a lot of the South Korean factories, you're seeing a lot more in South Korean factories, you're seeing a lot more of the of robots working. Because remember that for every 10 workers in South Korea, there is a robot at work. So they've automated 10% of the workforce already. And remember that most of the world is not even close to that. So South Korea, Singapore, Japan, these areas are automating fast. So China is also trying to keep up with that. So most of the production is not going to leave Asia to come to Africa if you're trying to compete on cheap. This, Vernon, is actually one of the reasons why I keep saying Zambia must be very careful not to sell itself as a cheap production destination. This is why I came up with that question of whether Zambia should become the natural beauty or the green machine. The reason I say this, if the world is targeting green, then Zambia should be aiming to sell a green production base. That's what we should be doing. And the reason is that we can't compete on cheap when people are automating with robots. Okay? You cannot be cheaper than a robot. A robot does not need NAPSA or NEMA, does not have children to go and take care of. A robot does not have sick leave. Okay? It does need to be maintained from time to time, but a robot does not have all these human things. And robots do not work in labor unions and demand wage hikes. Okay? Robots just do as they are told. So if you want to try and compete on cheap, that's going to be a dangerous place. So Zambia should be standing in front of the global economy and saying, we are the green production hub, not the cheap production hub. And that's a conversation we need to start bringing up for everyone to say, if you want to relocate a factory to Zambia, you're not coming here because it's just cheap. You're coming here because you can now tell your clients that you produce this in a green way, something that robot-based production where there is no renewable energy cannot do. That is what we can actually fend off as a country if we want to start bringing and competing for investment. We are a stable enough social environment, may not be stable economically, but we are stable social environment. You're not going to see many riots breaking out in this country. You're not going to see much unrest breaking out in this country. So people can come here safely to know that, okay, when we come to produce in Zambia, we're not gonna deal with social issues. Okay, as long as all people here care about is work, then that's all people care about. If you can bring work to these people, they don't really care. They're not gonna start fighting you. As long as, and let me also say this correctly, as long as you just bring work here and you don't bring your social desires here, that's all we're asking.
Yes.
Just don't bring those to my social desires with you. Just let's keep it at just doing business the way you did it with China. You'll often find that Zambia will be your green production where you can have a conscious ESG product out. We also do need to be careful about trying to sell ourselves as ESG too much, because the social side of it, Vernon, may require that you are compliant with certain groups of people who want certain things that you don't want. I think, wink, wink, hint, hint. I think we all know what we're talking about here. So we have to be careful about the ESG sales pitch because it can turn around on us. So that's why I said you have to be careful just to sell yourself as green production. Okay? Stick to green. Just environmentally sustainable. Just stick to that and that alone. Don't allow the other parts. Don't allow the S and the G to sneak in. It can be very dangerous for us. But other parts of the data, the reason I was just pointing that out is because of the growing services sector in China. Now, that is going to lead to, now in the McKinsey report, they were actually saying that aging populations, especially in Asia, are going to lead to a growth in HEAL jobs. So I think you've heard before, Vernon, of STEM jobs. But there's also the conversation about something called HEAL jobs. And HEAL stands for Health, Education, Administration, and Literacy. Here's the problem. STEM jobs are the highest paying jobs in society. STEM being science, technology, engineering, and mathematics. The highest pay is found in society. HEAL jobs are the fastest growing in society. In other words, the number of jobs you find in education. Education is the only place where you can hear 30,000 teachers hired in a year. Okay, health 12. There are no industries who are hiring that many people at a go. So the fast growing jobs are healed. This is actually, Vernon, one of the reasons why women employment is going faster than male employment. And you often find that even men are struggling in the workplace because men are either in physical or STEM. You often find men in physical work or STEM work. That's where we dominate. But you find that women dominate in heal jobs. I say it again, heal is health, education, administration, and literacy. So law, you find women dominating in those areas these days. You find education, women are dominating there. Health, women are dominating, aside from the doctor base. In fact, even doctors, you're finding a lot more women there. But nursing, where most of the jobs are, women are dominating in health-related jobs. So people-related, so heal jobs are often what we call people-building jobs. Jordan Peterson had an old saying where he said that men care about things, women care about people. And you often find that in those people-related jobs, women are very dominant in them, but those are also the fastest growing jobs in the economy because they are often funded, they're often government backed, they're often institutionally supported. So a lot of money goes into them very quickly. And they're also very difficult to automate. In as much as you want to, you can automate a factory, you cannot automate a teacher. That's a very difficult thing to automate. Even automating a nurse becomes very difficult because there's a lot of listening, conversation, care. It's very difficult to automate a nurse. So the jobs that are going to struggle to be automated are creative jobs and heal. Everyone want to write that thing down. In fact, I always tell people to write things down because they remember. So if you're in the comment section, write down heal, health, education, administration, literacy. Just so I know that somebody has picked that up. That helps you now understand where the fastest growing job growth in society tends to be. But STEM is where the highest paying jobs and the highest quality jobs are often found. Unfortunately, heal jobs are underpaid. But Vernon, what would you rather be? Underpaid or unemployed? You take your pick. Which one you'd rather be? That's a question most people need to deal with. Obviously, one of the fast growing trends in Zambia is entrepreneurship. Because it is something that we do need to balance things out. We need entrepreneurship in this country to be able to do that, to be able to deal with job creation. But we are going through a rise in self-employment, but a serious spike in entrepreneurship. That's a big one for everyone. Now, Vernon, let us go into some of the deep diving issues today. First deep diving issue, which before we get into our other story in the deep dive, is the finance minister calls for deliberate creation of financial solutions, of structured financial solutions and platforms for the primary purpose of stimulating growth for SMEs and local businesses. Now, this is an interesting situation. Now, there's a picture that is going around with the vice president of the USA, Madam Vice President, Madam Harris. She was walking through one of the farm she was walking through. And it was a very, very big conversation to see one of our farmers who was being hailed, and she even went on her page and posted about it. And I think his name was Bruno, if I'm correct. Now, one of the interesting things is, as there was a picture of her talking to that farmer himself, there was also a financial group who run a peer-to-peer lending platform who were also captured in a picture with her. And what that picture actually shows is that they also are platforms that are trying to work on it, because peer-to-peer lending is attempting to bring finance to the lower parts of the economy. Not when I say the absolute poor parts of the economy, that we haven't gotten finance there. Unfortunately, that's dominated by Kaloba and village banking and Chirimbas. That's where mainly that is the dominant force of that. But we do find, when you say the lower parts, I'm talking about the middle income people who are struggling to get loans because government and big institutions are crowding out and banking consolidations are taking things up. So it is a call for good things to start seeing a lot more technological innovation in the finance space. It is important to start seeing that. But the other thing also, Vernon, we have to also start doing is people need to be capable to absorb loans. I think we always like to push for capital to go there, but we should also be talking about growth services, education in business, teaching people things like business modeling, lean starting up. I think we've talked off the record, but I think we've talked about the types of books that a person who's starting a business should be reading. Things like Zero to One, things like the lean startup, things like the lean product playbook, things that you can launch yourself with and you can get started with. Starting point products, starting things that teach you the starting point and how to get started. You know, a lot of people may not understand startup science. There's even a thing online called Startup School. I would urge as many people as possible to go for it. Startup School is done by Y Combinator. It actually teaches people how to start your business, okay, how to start your idea, how to actually build your concept and get it off the ground and don't get stuck, and how to deal with the emotional issues of starting your business. So I do think that coupling it with financial solutions to support, we should actually be trying to train people in other things. I think that a lot of small businesses need to start engaging in analytics. Your sales, do you have your customer profiles ready? Do you study your customer? Do you know your trends of doing business before you start going out there looking for money, looking for other people's money, which you'll struggle to repay? Do you have the people who will pay you money without having to repay them? Okay, the people who will give you money without having to repay them are called customer. I often think people need to start looking for customers before they start looking for capital. And that's the biggest thing. I don't know what your take is, Brennan, when it comes to the conversation about financial solutions. I agree that we need to find SME financial solutions, but I just think we have to be very careful about overblowing it and trying to push SMEs to just look for capital when they're not even adequate with customers.
Yeah, so essentially, I feel education is everything, always, and always has been, everything. And I cannot overemphasize education. And you see, in these education systems, they're okay, but throughout the whole process of, schooling from, upper secondary, lower secondary, tertiary education, all the way, you find that we have been accustomed to think in a way that is limited. And I hear people talk about thinking outside the box most of the time, but we do not really live outside the box. You graduate, you go find a job, and finding a job is what is now perceived as financial freedom. When initially you are still but just crippled. It's every time you get paid, you pay the bills, spend money on unnecessary things. At the end of the day, you're actually even it's a miracle to see people actually even have still money up until the next pay. Mostly it's the first, second week, the money is all squandered, and you're now,
You've never heard of injury
waiting
week.
on, always checking on your bank account if the money actually has been credited into your account, so you can get on your shopping spree again. So I feel with lack of education, this is why we're still stuck at this point where even as much as you can have the most paying job in the country or in the organization that you are in, you are still not financially free because you do not handle money, and as much money you can receive, you will not make good use of it because you have no knowledge on how to multiply it, how you can manage it maybe, and be able to even save and invest it, so for your next, or even make more money out of that. So I feel education just has to be taken seriously. I'm not saying anyone should go to school, no, but take online courses, read as many books about financial management. I think that is to go. You don't need to go to economic school or accounts or banking school, no. I feel and education, and I think also just a passion and developing an interest to learn these things. Despite that, it will seem like you're being forced when initially it's supposed to come from you and say, I want to manage my money better, leave a legend, leave a legacy, a lineage that even when I'm gone, not only my children, my family also can actually live off it. My work, my sweat, my money, because I was able to manage my money as well.
No, and it's true. And thank you for putting that up, because that's actually quite important. And it's good. You're listening. You remember the three L's. Well done, Brennan. We're remembering the three L's. You're very important in all of this. But yes, the point is, I think that education financially and also entrepreneurially, like proper entrepreneurship education, because a lot of people get business education. Now, business education is not bad. It's just that unfortunately, it's only applicable when you are dealing with a big business. Okay, when you're dealing with 5-page or when you're dealing with 20-page business plans, that's not useful for a startup. So when you're trying to start your business and the lower level businesses, the smaller businesses, the micro businesses, where it's a one-person shop or people are trying to grow an enterprise, that's where a lot of the training needs to happen so that people know how to grow their enterprises to generate cash flow. And once there is cash flow, there's the opportunity for them to be able to repay loans. Okay, so I just want to make sure that cash flow generation is not cash acquisition, because this is a problem. I've seen so many businesses in Zambia who do this, Vernon, where their sole purpose is to just find capital. Where they do, once they get capital, they use that to operate the business, and again they go back to looking for capital. They don't grow their customer bases, but they're constantly growing their capital. Okay, how much money they owe, how many people have invested in. They're constantly raising money, but they're never growing their customer base. And so what everyone needs to understand, and I think there was an interview where I think it was on there was a Sunday interview between Grevazio and the CEO of Standard Chartered, Mr. Zulu, who said primarily we lend on cash flow. Collateral is a backup in case your cash flow does not kick in. But what we primarily authorize this loan on is based on cash flow. So what everybody needs to become is cash flow minded. How are you growing the cash flows of your business? Not to just take one huge amount of money and then go and put a shot straight into a big government contract and then try and look for a huge amount of money again, trying to shot. That is not a sustainable cycle for a growing business with lack of inventory. Yeah. So that with lack of assets in it. What you must be working on is building up cash flows already by finding customers, getting a flow of regular money, focusing on annual recurring income as opposed to large sums of money that get shot into your business once in a while. So I think if we can also try and help thinking of businesses to become more cash flow minded than capital seeking, capital will be more comfortable where there is cash flow. It's a simple mindset you need to understand. Okay, us who work in the capital markets already know we assess investments by cash flow generation. Okay, so if you're a cash flow generating business, you are more likely to have a lot more investment or a lot more access to capital based on that. Okay, even your banks become more friendlier to you, your interest rate become more friendlier to you. All they want to know is that you're a cash flow positive business, okay? Or you have the adequate amount of assets, but you are able to start churning money through your system. Then people become more comfortable lending money to you. So I want as many people to actually understand that education must accompany, so knowledge must accompany all of that to ensure that we do get the adequate investments in it. I'll just take one comment here by Maureen. Good morning to everybody else who has joined us. You have not been forgotten. You have been seen. But a comment has actually joined us here by Maureen. Sorry, let me just get the name here. I think my screen was a bit too small. I was seeing there. Nenechi, who has said, we need to take full responsibility for our education. We should not limit our education to the classroom learning. We need to expand our education beyond the classroom. Maureen, I cannot agree with you more than that. I cannot even agree with you more. You are absolutely correct there. One of the things people need to understand is that education starts in the classroom, but it ends in real life. And the majority of it will happen in real life. So I was going to actually say education plus application. So your experience in business is also going to help you with understanding your customers and your cash flow. So yes, you can read books, take courses, all those things. All the things those things will do is introduce your mind to new things. But really, when it comes to the implementation of it, it'll be about implementing it, learning from mistakes, reorganizing your thoughts, seeing how applicable this part is in the Zambian context. Let me give you a simple example, Vernon. A lot of people come to me and say, Munyumba, isn't debt healthy? We switch on our YouTube and we always hear Robert Kiyosaki and Grant Cardone talking about how debt, we have to use debt, or the rich use debt, the super wealthy use debt. That's why. And they sing this song. And I tell them, if you use debt in Zambia, you will die. Okay? And I explain to them, and I keep telling people, you need to understand the context that Grant Cardone and Robert Kiyosaki are speaking from. They're speaking from a nation that takes 1% interest rates. Okay, those are people who have access to a single percent interest rates. Some of them have even used interest rates as low as 0.75%, 0.2. They've got very low interest rates on their money. Okay, the average mortgage in America is 2.3%. Vernon, can you name a single institution in this country that issues loans at 2.3% interest? No.
It's too low.
Okay, no. You see, an American will also rent their house at an average of 6 to 7% return in terms of rental return. So the rent to price ratio of the house is usually 6 to 7%. So if the house is 7% and your mortgage is 2.5%, of course it's a no-brainer to utilize debt to build a home, because all you have to do is collect the rent, use about a third of the rent to pay the mortgage, and then you've got the rest sitting there building up in cash with the value. So your renters are literally paying off your mortgage for you. All you have to do to build a wealth portfolio is literally just acquire as many mortgages as you can, build properties with them, and then put people in them, and then those people will pay back the rent for you. They'll pay back the loan for you. In Zambia, on the other hand, you at best can get about 9% return on your property. Really, you're looking at about 5 to 6% average return on your property, and then you've got a 16 to 20% mortgage. You are making a loss every single time you're paying that mortgage. Yes, the value of the house is going up, but the interest rates are so high, they're not making sense for what you are trying to invest in, unfortunately, at that moment. Unless, Vernon, we start having landlords who put a 2-bedroom flat on the market and say, right, we want to make 25% rate of return on that 2-bedroom flat, meaning, Vernon, on that single 2-bedroom flat, you should be paying about you should be, in terms of the quarter of the return, a simple 2-bedroom flat, Vernon, you should be paying about 10 grand every single month. Now, if you put a 2-bedroom flat for 10 grand in the Zambian market, and the other dynamic, by the way, which we also are forgetting about America, the other dynamic is 80% of their working age population are working, okay? 80% of them. In Zambia, 35% of the working age population are working. The average American has an average salary of $6,000. The average Zambian has a salary of 6,000 kwacha. Okay. Put these dynamics into play. And what you'll start to see is when you get that concept of investing, of trying to use mortgages to grow a property portfolio, if you don't have access to them, you find that a lot more people can go bankrupt doing that here in Zambia while people are thriving in America. So that is what I mean by when you obtain an education, you put it into practice, you sit down with someone to advise you, put it into practice, and then you'll see firsthand what the contextual interpretation of that information is. You see the difference that I'm talking about here. Okay, so let's quickly drift into our other deep dive conversation for today. And yes, I was just agreeing with our last contributor there, who was talking about education must go beyond the classroom. Application is equally as important as education. Yesterday, we did get a piece of news that Cobalt, which is one of the big metals companies, which was a big, huge company that's backed by Richard Branson, Jeff Bezos, and Bill Gates, who have come here to try and use artificial intelligence in order to screen, and they've got a mine that they're trying to target in Zambia, have hired the first female CEO for their copper mining unit. Fikei Makaya, sorry, madam, if I've slaughtered your name, will become the senior most woman yet in the mining sector, joining only 11% of C-suite positions in metals and mining companies globally held by women. That is how exclusive it is. Now, she's constantly talked about the importance of women going into STEM. She's an engineer by trade. She's got a master's in engineering from Britain's Cambronne School of Mining. So she actually has worked in the mining sector in Zambia. And President Hichilema did say in a statement that Cobalt Zambia, with Fikei as at the helm, would play a critical role in achieving the country's ambitious goal of getting to 3 million tons by 2032. So this is actually quite important here. So this is what we're seeing in terms of mining female leadership. It's actually the first woman to take the helm of a mining company in Zambia, because usually this is a male-oriented field, not just only in Zambia, but also, as we've said, only 11% of senior managers in the mining industry are women. And it's not because there's a big old sign saying no women allowed. It's also because women don't participate in engineering as much as men. When you go to any school of engineering, one of the problems that we keep finding is that it is mostly men who are in those classrooms. It's women in STEM where the issues are. Even computer programming, Vernon, one of the problems we've seen is that women are not in those programming classes, yet the best paying jobs are sitting in cybersecurity management, app development, user interface development, customer experience management. Those are programming divisions and programming roles, but they're not as many women. I was recently talking to a programmer, female programming coach, who's actually doing a women's program, a women's training camp for women in programming. And even her, she was saying, look, even in class, I was like one of 2 women in my class. Okay. Class is full of guys. So you can see that when it comes to programming, men actually do dominate, unfortunately, in those areas. So as a result, that is why you'll see it. Journeying off quickly, Vernon, to our chart of the day before we get into the resist to the change conversation. Our chart of the day, something that we spoke about earlier, is the reversal of the massive losses that were happening in the composite bond index in USD in Zambia. And we're seeing a strong recovery. Now, it is still down 3.38% year to date, but it has bounced up about 8%. And what you're seeing is that corner part there is that all of a sudden, with the kwacha getting stronger, there's this powerful reversal that is taking place in terms of the composite bond index. So it is trying to recover to where it was. Now, the all-time high of the composite bond index was September 2022, where we saw it at 298. So we're trying to get it back there. It's still about 13% below its all-time highs of 298. So, but this is good news for the offshore investors in GRZ bonds in Zambia, the ones who have invested in their bond portfolio, seeing a stronger kwacha. So this is what I always say for offshore investors. If you're a Zambian outside, when the currency is getting weak, invest in property. When the currency is getting strong or it's stable, invest in bonds. Because I think the problem with property, which they face when the currency is getting weak, when the currency is getting strong, is the cost of construction. That's why you'll see that our remittance flows in the quarter, probably in quarter one, might pick up. But generally, when the interest rate is performing poorly, remittance inflows come in very high. So Zambians then start pumping in money in order to build their homes. They start doing it as much as they can to build their homes because they see huge discounts for their construction projects, those home projects, the property projects that they want to come and retire to. A lot of Zambians build homes to come and retire to, or build homes they can rent and live off. A lot of Zambians abroad tend to try and deal with property with rental income, really because they've got much higher salaries, and a lot of them are professionals. Most of the Zambians who leave Zambia are professionals, so they tend to earn much higher salaries outside there, and therefore they can remit money very quickly. So that's one quick point I just wanted to point out here. This is good news for the Zambians who are abroad, who are trying to play their bond market. What you should be retiring to, if you're a Zambian abroad, trying to play the currency markets and the markets in general, is have a strong bond portfolio and a property portfolio. That combination will often be good for you if you also would like a stock portfolio. But if you're looking for your base for retirement, bonds and property are the strongest part. My advice I've always told people is your retirement portfolio should always be somewhere in the realm, Vernon, of about 40 to 50% bonds, 30 to 40% property. Therefore, about 80%, I'm talking about the main part of your harvest, should be coming strongly from property and bonds. And you should be assessing the market, not building the properties you want to go and live in, building the properties the market needs so that you can get the best out of it. So, Vernon, let's get into our topic of discussion and introduce it before we get into our interim break, and that is change. So we have here something called the business growth model by stages. And not being able to change and adapt is one of the reasons businesses will suffer. Usually people try to over-perfect the business from the beginning, or what they try to do, Vernon, is they get into a groove and they refuse to grow. So growth in itself, Vernon, is change. So there is internal. So on Monday, I talked about the environment of change that we're operating in, but the natural trajectory of a business requires change. So there are about 6 stages I want to just quickly go through before I start talking about change management. Stage 1A at the bottom is what I call your core task phase. That's where you're focusing on just your core task. You're often self employed, and your goal is to learn and build everything. So you start with a shoddy product. You should not try to get a brilliant product out because you'll never get a product out. Just get a shoddy product out, okay? Just something. And so that once you've got a product in front of a customer, they will start giving you feedback. At this, you're trying to extract from the market. But the four main things you are focusing on at this point is getting a minimum basic product in front of your customer that they are willing to buy, complying with basic business. That's what you're just trying to comply. You're trying to get your sales going, and you're trying to create cash flow. That's really what you're looking for. At this point, you need to look at, there's also a Maslow's hierarchy of needs, by the way, Vernon, for businesses. And I'll show that even tomorrow. But there is one on what each business needs at each stage of its needs. Then you go into the second stage. Once you've now built a basic product, now you want to make that product fit the customer's needs. So that's called product market fit. Okay, that's what you're trying to get to. Get to a stage of product market fit. And once you've gotten to a stage of product market fit, then you also want to get to operational efficiency. Remember, I always say when you make a product, start by making it functional, then make it operational, then make it sustainable, then make it beautiful, then make it memorable. But start with functional. That's your core task phase. Then start with operational efficiency. Now you want to get the logistics of a business. And at this point, you start molding a business model. Once you've mastered this stage, then you go into revenue growth. You want to be very careful about growing your revenue before you've got your product correct. So at this point, the first two stages are what we call the product stage of a business. The next two stages, those green ones, are what we call the profit stages of a business. So your aim is to grow your business, reduce your costs so that you're profitable, and create sustainability. At this point now, you're putting strong marketing behind your products. You're putting a lot of operational growth. Your relationships, you're trying to build them now. So that's your tactical phase. Then you become strategic. And at this point, as a business owner, you are now hiring. When you've developed a product that's generating a cash flow that fits the market expectation, that's when you can now escalate to becoming a manager, hire a sales force, hire an operations team, and then start doing the administrative parts of your business. Okay, so you then want to grow into that. The 2B stage is what we call differentiation, where you now is where you start talking about the strategic level, where you're differentiating your business, you're creating strong relationships, and you're optimizing the orders that your customers are giving you. This is your business owner phase. And then you're now going to expand finally, and before we get to that break, is into your entrepreneurship phase, where you're now hiring managers to manage your workers, because now you're probably CEO or chairman. So you don't want to become CEO on day one where there's no one there. You're going to be the CEO of thin air. You want to be the CEO when there's people there plus managers. And by the time you get to CEO, now you're dealing with building a brand, impact, creating industry transformation. You're not giving back. You are leading change in your industry. You're not adapting to change. You're leading change. You're building a legacy and creating permanence. You want to be permanent now in your business. And this is what we call the permanence stage of your business. So you want to go through product, then you want to go through profit, then you want to go through permanence. And if you noticed, Vernon, through each of these things, your critical focus starts to change. Your methodology starts to change. So if you are failing to change, guess what you're going to do, Vernon? You're going to fail to grow. And that's the key part. So on the other side of the break, I want to talk about change management. And I'm going to talk about 5 reasons people resist change, who resist change, and how they resist change. So you want to know the what, the why, the who, and then we'll talk tomorrow about the 10 battles of resistance to change.
Right. And we are back at it. Thank you so much indeed for still staying tuned. As we'll be just wrapping it up, in the last segments. I'm actually really looking forward to this last aspect of the conversation this afternoon. Please.
So if we're talking about trying to change, as we have established, Vernon, you need to change to grow. You are not going to grow as a business if you are not changing properly. So let's talk about where the main culprits of change. And this is a study done by a group called ProSci, who looked at best practices in business. And what they found is in the group who are the biggest culprits of resistance to change, even in Zambia. In fact, if you've dealt with the government, you will notice this very carefully. While the top parts are always talking about change, new policy, all that, the executives and the directors are often okay with change. The problems where change is most resisted is at the bottom. So the senior managers and the executive directors have often bought into the change. So there's a little bit of resistance sometimes there, but the key resistors are middle managers. Okay, especially in big institutions, middle management are often your most resistant to change because they know that any change can easily change their roles, it can remove their responsibilities, it causes issues to them. So they often create the biggest resistance to change because they're the ones who have to lead change of the frontline employees. So whoever's managing frontline employees, those are the people who are going to be your most resistant to change, not your senior managers, because they're strategically minded. So when you're looking at the biggest risk of change, always look, and especially if you've got any institution with more than 20, 30 people, your middle management. If you've got many stores, for example, who's managing each store, that's the person who's the most resistant to change. So when you're running businesses, you're in an institution or an organization, middle management are your biggest threat to change. As you can see, about 42% of the resistance to change comes from middle management. Now, there are 5 reasons, Vernon, where people and by the way, this also reflects in your frontline workers. Frontline workers often fear change also as well. They're also quite strong, but it's really the middle managers because they have some seniority and they don't want to lose it, at least over someone. Now, when you're looking at your 5 reasons people resist change, there's something called the ADKAR model, also created by ProSci. In fact, they are the inventors of this model to help you understand why there's resistance to change and what areas you should be dealing with. So when you're trying to take your organization or your business through each of those stages, you need to first understand, are people aware that we need to change? We need to start shifting from just creating a basic product to creating one that's operationally efficient. So why are management now going from we just need food to come out to we need this restaurant to run at optimal efficiency? Because we're trying to now go to the second branch. Okay, so we need optimal efficiency in our restaurant. So now you have to explain to them why we need to do this. So awareness of the need of change, which is educational, is quite important. Desire to participate and support in change. Okay. Now, this is where you have to be careful. A lot of people resist change because it threatens their values and it threatens their needs. The change that comes may threaten my job, or the change that comes may threaten the values that I operate with. So, in other words, maybe I don't value hyper efficiency, and all of a sudden, this firm wants to talk about hyper efficiency, and I want time off. I want time to be able to see my family. Maybe that's why I took this job. It gave me a lot of relaxed time. Now, today, we have a new leader in who wants to start talking about we need to work, 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 no more party after party hour. We're refusing here. So, we have to look at the desire for people to change, because you can actually see this playing out in government right now, where you've got a new leadership who's pushing for change in behavior, while simply the guys who are in the actual body of it are resisting it. They're resisting it with the strongest impetus possible because they've gotten used to a way. There's also knowledge on how to change. People resist change because they don't know how. You haven't given them a roadmap of the things they need to do, and they're worried that this change might question their competence. What if this change makes them look incompetent? Okay, so you have to give them the knowledge of how to get through this process of change. Change is something you need to manage in all society. So businesses must change to grow. You are operating in a changing environment. Change has become a leading issue in management because businesses have to constantly go through change. Like a child growing up. A child growing up is constantly going through changes. The other thing is also the ability to implement change. Have you skilled and equipped your employees? We went through this, Vernon, where we had to now, this new thing we're doing now of being on StreamYard and doing the show on Facebook. It wasn't always like this. We had to go through a process, even on this show, of how to do it. And it questioned people's abilities. It questioned knowledge. We had to time this. This didn't happen overnight. We actually went through a process of trying to get behind the markets onto Facebook and onto social media, so that now we have a different way of distributing the show and getting it out there. So that's a different thing that we had to start to face. Then also reinforcements to sustain change. Has management made a commitment to creating support structures for change? Have we made a commitment, like let's say we're switching from just being on radio to also being on radio and online simultaneously at the same time? Did management make the commitment to make sure that the internet is always running, to make sure that we have adequate infrastructure? Did management make the adequate commitments to support the change that needs to happen? So ADKAR gives you reason why I resist, because you can tell me you need to change, but you haven't given me the implementation tools to be able to make a change. And finally, Vernon, how do people resist change in your business? This is what you'll see when you see resistance to change people. And this one might hit people. Lack of participation in the change. So you've told people, okay, we're going to be changing, and then people are just not showing up for certain things. But we're changing our business model. We're going to be introducing this new product that's coming in, and then people just don't show up for that part of the work because they do it. So that's one thing. Openly expressing negative emotions, nitpicking. Boss, this won't work. This can't work. Boss, not in Z. No, that mentality. And I'm sure we've heard that language even amongst those murmurs. So openly expressing negative emotions towards changing circumstances. That is how people resist change. Absenteeism. People just don't pitch up for work. Full stop. So they may not be participating in this. They just start calling in sick days. I'm not pitching up everything. The other one is reverting to old ways. This is the one we see the most and we mostly pick out, that people just revert to the old ways of doing things and refuse to embrace the new ways of doing things. So this is what we needed to know. Even when we came and pushed this onto Facebook, we understood that we have a growing audience of people who are on social media, and we need to start building an audience there so that we can actually adequately tap into that. And also decreased productivity. So part of what we're seeing is that sometimes when people don't want to change, what they start doing is start slowing down output to make the change look ineffective. So if you want to start noticing where you're going to start seeing resistance to change points, this is the behavior you need to watch out for. Tomorrow, we're going to be talking about why people resist, what the battles people go through and the fears they face. But quickly, Vernon, some quotes about change that I would like us to know here. 2, change is hard because people overestimate the value of what they have and underestimate the value of what they may gain by giving that up. This comes from James Belasco and Ralph Steyer. And also Barack Obama says, change will not come if we wait for some other person or some other time. We are the ones we've been waiting for. We are the change we seek. And what it often that means is that if you want to implement change, don't enforce your people to change. You must be the trigger to change and the inspiration to change. And finally, John K. Potter, who has also said, one of the most common ways to overcome resistance to change is to educate people about it before you implement it. This is often a mistake managers make and business owners make. It's my business. I'm just going to change things. And then you just tell people it's already happened. We're not talking about this. But if you educate people before the change occurs, and this is a real issue. When people want to implement different compensation structures, they want to implement quite maybe new things in how maybe new incentive structures. Maybe they want to implement a saving structure for employees. You need to educate. Even if you've got a housekeeper at your home and you've now started putting her on NAPSA or a garden at home, you have to put them on NAPSA. Talk to them about this. Okay, why are they going to start seeing 5% of their salary missing? Because they're going to start resisting this. So communicating the communication of the ideas helps people see the need and the logic for change. Education process can involve one-on-one discussions, presentations, memos, reports, but you need to communicate to people so that they're not shocked by the change. They are expecting it, bracing for it, and they can now ease their way through it, and eventually the change can become the new culture. That, Vernon, is at least some of the things that we should be looking at when we're dealing with change. And tomorrow we'll be talking about resistance to change. You know those people, Vernon, who still drive manual cars and who write checks. Those people. Have a wonderful day, Vernon. And God bless.
I appreciate it. Thank you so much.
Cheers.